Hello everyone and welcome back to my channel. This week we're really going to be looking into real estate investing. What does it mean? How do you consider, investing as an individual or investing in a real estate investment trust, otherwise known as REIT? Should you invest in a commercial real estate property or a residential real estate property? We're going to be digging into all of that this week. So guys, investing in real estate is a great way to build your investment portfolio. Why? Because like we've shared before in most of my previous videos, real estate is a great hedge against inflation, opportunities for income earning as well on your real estate property, tax advantage on your real estate property depending on where you live, country, the market you own real estate in. All of those factors basically make real estate a great asset class to consider, right? And there are people that have become millionaires and billionaires from real estate investing. I mean, some of the billionaires that we know have extensive real estate portfolios in their investment portfolio. That's because real estate will always be a great asset class. But there are some key things to consider in terms of the options, right? Do I invest as a direct property owner, or do I invest in a real estate investment trust? Do I invest in residential real estate, or do I invest in commercial real estate? Thankfully, I have had experience investing in all of these different options. So I'm going to be showing you what it means and my experience and what I think you should consider when making your own decision as well in today's video. If you are not subscribed, this is a great opportunity to subscribe and share with your friends so you don't miss out on all the great investment stories we share on this channel. Now back to real estate investing. Now, of course, if you invest in a property all by yourself, you get to become the property owner, right? So basically you own a tangible asset, and nothing as good as having a tangible asset that you can look out and say, this is what I own, right? Or, I mean, most of us have parents or grandparents that owned real estate back in the day, and it was great to, some of you are probably taking that over as an inheritance, or your parents have taken that over as an inheritance, but it was tangible, something you can see. That's what direct property ownership gives you. There's also the potential for appreciation because, like we said, real estate would always grow with inflation, right? So it would always appreciate no matter what. Now it can appreciate in different terms, right? Because, I always say that appreciation is also subject to markets. Now, there have been some instances, and there is context where the value of real estate has dropped. And that's what you'll find in what they call bubble markets, right? Where you have a market where everything is just, appreciating, and there's really nothing driving that appreciation. You can't really, point to a factor. Is it demand? What is driving that appreciation? Is it inflation, right? If you can't really point to something driving appreciation, then chances are it's a market bubble and it would crash. Now, I'm not a real estate certified surveyor or valuer, right? I'm just going to speak from my own experience. So if you want to find out if you're in a bubble market, if your real estate is well valued, or if the appreciation is actually just real appreciation, you can speak to a certified real estate surveyor or valuer to give you more information about your real estate property. So back to what we're saying, it gives you access to owning the tangible assets. There is income appreciation as well. And of course, income generation, if it is something that you do, if it's an asset you do not live in, right? Because you can earn rent from it. Basically, rental value also increases with inflation. So I don't know if you're someone who rents properties right now, your landlord has probably reached out to you to say, oh, because of inflation rate, I may have to consider increasing your rent by a certain percentage, right? Landlords do have to adjust for inflation as well. And if you're someone that rents, you've probably experienced that now. It's always good to be on the other side where you own the property and you are earning rent, and can also consider increasing the rent you're charging based on inflation rates, right? So those three things make direct property ownership good. And it can also come with some tax advantages on markets because you have some tax deductions on mortgage, property taxes. There are certain factors and variables that come into that, but ask all the questions in your market and get all the information, right? And I think the final point is you can use it as leverage. You can basically put your real estate as collateral to get a loan, a line of credit for your business if your business owns the real estate. And if you own the real estate, you can hand over the title as director of your company, and it can also act as leverage. Now, all of those factors, or all of that comes in when you own real estate directly. Now, if you decide to invest in a real estate investment trust, that is very different. Basically, a real estate investment trust is a scheme through which an investor gets to be an owner or a part owner or a shareholder, right, in a pool or a trust that directly invests in income generating assets, income generating real estate property. Basically, that's what a REIT is. You do have public REITs and private REITs. Now, public REITs are REITs that are listed on the exchange by public institutions, and you can buy into it. In Nigeria, we've not really had a lot of REITs do so well. Right now, we only have like 3 publicly traded REITs: the Union Residential REIT, the Sky Shelter Fund REIT, and finally what's the last one called? The UPDC REIT. Now, all of those REITs have not done fantastically well in terms of returns. Now, compared to a market like South Africa that is a lot more advanced, they have a lot more REITs on the public exchange, right? So it's doing a lot better. Now, one thing you find in terms of the public REITs in Nigeria is most of them are heavily focused on residential real estate. So because of that, their rate of returns have been low, right, compared to inflation. Remember, you always have to compare returns to something. And so not fantastic investment options for a lot of investors, right? So that is the type of public REITs. Now, there are private REITs. What is a private REIT? Where a group of people come together and say, you know what, one of us is an expert, or one of us has real estate development experience, owns a real estate development company, and then we'll pool funds from investors and we will buy up income generating assets. Now, in my experience, I have done that both in Nigeria and in the UK. Now, in Nigeria, we came together to pool funds to buy land in a very good location, and the goal was to, get a JV, do some private development, and build on that and sell off and get our returns. So that is sort of a private REIT. Now, my experience with that is there's some, delays when it comes to finding the right partner to do a JV with. And sometimes that can affect your ability to get your returns back over a defined timeline. So while we know that eventually we have options to either sell off the land because it has appreciated in value, or partner with someone and do a JV, develop and sell off properties and get returns, we have options, but it's just taking a longer timeline than we expected as investors. Now, with the private REIT that I invested in the UK, this is a more advanced market, a more liquid market, and they invested in commercial real estate. Now, what they do is they pool the funds, buy up great commercial real estate at auction, below market price, refurbish, develop, sell, and provide returns to investors. So that's an example of a private REIT, but it's focused on commercial real estate, so it provides better returns in a better market that is advanced and liquid. My experience with the Nigerian market is it was residential real estate, so taking longer time in terms of finding the right JV, finding the right partner to develop. We do have the option to sell, but we would rather develop and then sell off and then get our returns back. So it's just taking longer time. I haven't liquidated my returns yet on that REIT, but with the private REIT in the UK, I have liquidated my returns on that REIT, and it was a good experience because we earned an average of 8 to 10% in returns from the UK in pounds, from the UK REIT in pounds, right? Of course, it's good to earn in foreign currency, right? So, that is direct property ownership versus REITs. You can also consider commercial and residential as an individual, right? And it's very different in different markets. Of course, residential here means you're having to deal with tenants, tenants having you fix things, you take up all the costs. With commercial, your tenants takes up all of that responsibility, you have no business with it. So very different contexts, but of course that commercial real estate requires a lot more in terms of capital to invest in. So my experience has been it's better to do that with a private REIT, to invest in commercial real estate in a liquid advanced market, and then just stick to residential direct property ownership in an emerging market like Nigeria. What has your experience been? I'd love to read it in the comment section. What are your thoughts about investing in real estate? Is this something you're considering? While you may not have the budget for it, have you considered pooling funds with other people to invest in, real estate? I have done that with real estate clubs, investment clubs, and I'm going to share all of that experience in the upcoming video. But right now, let me know if you have a question or a comment, and I will see you in the next video.